Hey everyone, let's address the elephant in the room. You might be hearing a lot of noise right now, especially if you're following the headlines. We've got news about Trump's tariffs, talk of a recession, and interest rates dropping. Some are saying the property market is about to crash, while others are claiming it's going to boom. It's confusing, right? So today I want to break all of this down for you and look at what's really happening without getting swept up in all the panic. Now I get it. The media has been pretty dramatic lately, with people like Peter Dutton predicting a recession and everyone freaking out about what's really happening in the economy. But let's take a breath. Yes, there's a lot of uncertainty, but there's also a lot to consider, especially when it comes to Australian property. If you look at the global market, Australia's property scene is really something special. It's not just about the economy. It's about the systems we've got in place. Our banking system, our lending policies, our property ownership structures, they're all designed to support people buying and investing in property. It's what makes Australian property unique. In fact, when the world feels like it's going downhill, people look at Australia as a safe bet. Why? Well, I think there's a few key factors. We've got a solid reserve bank system, a lending system that encourages home ownership, and a place people actually want to live. When the world gets tough, Australia shines, even in times like these. If you think back to the GFC or even the COVID pandemic, you'll notice that property demand in Australia stayed relatively strong. Why? Because people still see property as a safe investment, even during tough times. Looking back at the global financial crisis in 2008, we learned a lot about how Australian government handles recessions. During the GFC, the Reserve Bank dropped interest rates significantly, and they'll probably do the same if we face another recession now. Back then, the Reserve Bank made moves to help people borrow more money, which in turn kept the property market ticking. And let's not forget about the incentives they introduced, like the first home owner grant. In fact, that grant originated during the GFC and is still around today, albeit in a slightly different form. So, what can we expect now? Well, if history repeats itself, we're likely to see more government support, more rate cuts, and more opportunities for people to enter the market. The banks will probably follow suit and lower their interest rates to stay competitive, and this will make borrowing easier. We've seen it before, and we're seeing it again. But let's not just talk theory. Let's look at what happened to property prices after the GFC. When interest rates dropped, people who were previously on the sidelines started buying up property, especially in the more affordable price ranges. And guess what? Property prices went up. In fact, the median property price went from $470,000 in 2008 to $700,000 by 2018. That's a 50% increase. So, why is this important? It's important because history shows us that property is a safe investment, especially when the government steps in to support the market. When rates drop, people can borrow more. And when people borrow more, they buy property. And when they buy property, prices tend to go up. Now, let's fast forward to today. We're in a very similar position. Interest rates are higher than they were a few years ago, but the banks are already predicting a drop. In fact, some are saying rates could fall to around 3% in the next year or so. When that happens, the borrowing power of everyday Australians will increase and more people will be able to buy property. And what does this mean? Property prices will rise again, especially in the more affordable price brackets. But here's the kicker. It's not just about buying any property. As rates drop and more people enter the market, they're going to be focusing on affordable properties. That means properties that are in the $550,000 to $650,000 range could see significant growth. And if you're looking to invest in property, now is the time to pay attention to those price points. So, what should you do with all of this information? Well, first of all, don't panic. If you've been sitting on the sidelines waiting for the right time to buy property, now might be your opportunity. As rates drop, more people will be jumping in, and that's when the prices will start to rise. You don't want to wait too long, because once those price brackets start to climb, it might be harder to get in. If you want to know more about how to take advantage of this and find the best opportunity in today's market, I invite you to join our upcoming webinar. We'll break down the latest market trends, explore the best regions to invest in, and talk about the strategies to make the most of the current property climate. It's free and you'll walk away with the knowledge you need to make the most informed decisions. Click the link below, or if you're watching this as an ad, hit the button on your screen. Register for our live session where you'll have the chance to ask questions and learn more about where the property market is headed and why now is the perfect time to act. Don't miss out on this opportunity. The window to invest in these affordable properties could close faster than you think. I'll see you there.